Hello there and welcome to Business Bullet. I'm Robert Miller. Well, what a difference a weekend makes. That Paris meeting of finance ministers and central bankers from the group of 20 nations set a deadline for this coming Sunday for the Eurozone leaders to come up with a plan to agree on a credible recapitalisation of Europe's banks and an agreement on the losses the private sector must bear on Greek bonds and possibly others like Ireland, Portugal and Spain, maybe even Italy too. The positive noises coming from Paris have given the markets heart, but only for the next few days. The Eurozone must now work with the International Monetary Fund to put together a Eurozone rescue solution to both the sovereign debt and the banking crises. And don't forget that affects UK banks and Royal Bank of Scotland and Lloyds Banking Group in particular. And if you are out and about in the city today, you may well come across the Capitalism is Crisis camp set up around St Paul's Cathedral. London is just the latest capital to see such protests against banking and wider corporate excesses. Frankfurt, Rome, New York and Chicago all have similar encampments, and the whole concept is fired by the indignant ones in Spain and Madrid in particular. This is the beginning of the global movement we flagged here before, and it will spread and intensify, particularly in the Eurozone. So it would be very foolish indeed for politicians and indeed banks and companies to dismiss the demonstrators as a fringe. They're not. They have large-scale tacit support anyway across a middle class who, like the young, are seeing unemployment and living costs rise. So be prepared. They will cause market volatility this winter. Now, in the markets today, BP has announced a settlement with its partner in the Gulf of Mexico, Maconda well, which had an oil well blowout, you remember, on the Deepwater Horizon rig, in which 11 people died. Anadarko will pay BP £2 billion towards the cleanup costs. That's certainly given a lift to BP shares, but they're still more than 50p below where they were. That's this year's high, 494p achieved in January. In part, I think the appetite for BP is fueled by a reasonably buoyant oil price. Brent crude, for example, has been trading above $110 a barrel, and West Texas Intermediate is still above $85. It's hard to see what's keeping Brent crude quite so high, as the global economy is slowing and therefore demand will slacken. As for BP, I still think the chief executive, Bob Dudley, is under growing shareholder pressure to map out a clear future strategy for the oil giant and implement it. So far, at least, he hasn't succeeded, and BP shares will continue to suffer. And from the energy sector to miners, Rio Tinto is also enjoying the market's relief rally, because that's what it is, after signalling a £5 billion sale of assets in its aluminium business. That's just 4 years after buying Alcan, you remember, for £24 billion. Rio is going to keep its Canadian aluminium arm and sell smelters and refineries in 6 other countries. Well, with margins in that particular business being squeezed ever tighter, I think Rio's exit is sensible, although achieving a full sales price on the aluminium assets will be hard going. Investors are likely to lobby for a special dividend, so do keep hold of the shares. And that's it for today, but stay with us online for all the latest news and analysis, and please do post your comments if you feel so moved. Thanks for watching, and please join us again at 11 a.m. on Tuesday, when we'll have those September inflation figures, which are likely to move closer to 5%. But don't worry, that's expected.